Hey everybody, Jim Malone here, coming to you live from Dallas Trading Floor in beautiful Dallas, Texas. Here we are. It's a Friday, and we're gonna be live here for about an hour, taking a look at certain stocks. It's a very interesting day. We are on the day prior to the big split for Tesla, and also for Apple. As you know, anybody that was of record on the 21st is going to be getting that stock split. Is going to be getting those. So, and that's going to happen on Monday. So get ready for that. We're going to have a stock split on Tesla and on Apple. So it's pretty exciting stuff. And I want to kind of show you how I am going to be trading that. So let's get into the charts right now. Let's look at the market direction. The market direction is up. Wow, it's up again. Can you believe that? It's just it defies description. It's so powerful the market is going up. It's 11670.41. It's up 0.39% again today. So I do expect that once we come through this weekend, I do expect a little bit of a pullback, and that's kind of how I'm going to be trading Tesla here. But for right now, we're in uptrend, so you don't want to be short anything, and it's a pretty exciting that's going to happen. So basically, I want to show you the first chart I want to show you is the Spider. And by the way, the Spider is the single largest ETF in the world, and it's worth about $220 billion. And why do I show this? I always show this on the first slide because it's so important. Everything we want to look for market direction when we're trading, and this is the best indicator of market direction. This is the largest, this is the most wide, this is the best indicator of the overall market direction. And look at it's up. It's up tremendously. It's at 349. I can remember just a few months ago on March 23rd when this was at 218. Can you believe that? That was in the depth of the pullback from the COVID-19 thing. And it's just been going up steadily ever since. And it's even moving higher. So do I expect a little bit of a pullback? Well, maybe not a pullback, but at least a leveling out. So I do think that that's coming. But for right now, you don't want to be short on anything because of the strength of the Spider. So it's just amazing. Now, most of the stocks that I'm going to be talking about are in the QQQ. Basically, this is the NASDAQ 100. The NASDAQ 100 are the 100 largest tech stocks typically. And of course, pretty much everything in there that's really good, Apple, Microsoft, but there's one big exception that is not in the QQQ, not in the NASDAQ 100, and that is Tesla. And so part of the reason I believe that there was this stock split was to get ready for Tesla to go into the S&P 500. That looks like the way it's probably going to be. So, but I do expect a pullback after the stock split, and then I expect as the stock gets out to a wider number of people, I do expect Tesla to even move higher. But in the short term, I think there's going to be a pullback on Monday or Tuesday. I don't know after the stock split, and then I think it will march higher. And that's going to give us hopefully a big opportunity. I know that I'm getting ready for this by getting all into cash so that I can take advantage of this upward movement. But it's going to pull back first, and then on the other side, I will probably be a buyer of this. So that is the QQQ. Now, I also want to show you something here, and I want to show you a stock that's breaking out. And this is on the watch list, by the way. And by the way, if you're interested in getting access to the watch list, it's super easy to do. All you have to do is go to go to DallasTradingFloor.com and sign up for the link. I will send it right to you. And by the way, we're for everybody looking on TikTok, we are broadcasting live on YouTube as well. So if you want to see the charts, just jump over to there. It's just youtube.com/DallasTradingFloor. So I just kind of wanted to show you that. Now, if you want to go ahead and get the link to the portfolio where I have all these watch lists of stock, the one I'm going to show you next, it's super easy. All you do is you just go over to www.dallastradingfloor.com and in the lower right-hand corner, just put your name and first and last name and email address and just sign up, and you'll get the link free, and it shows you kind of what I'm trading and how I'm trading it. So let's get into it. The company that I'm talking about here is Akamai Technologies. Akamai is a very important tech company. It's been around for a long time, but it's getting some new legs, and that's because with this COVID-19 thing, everybody seems to be getting on the internet and seems to be using the internet. Now, what this is this is a system that lets content to be cached near the points of presence, the POPs. So this is a very important infrastructure play in the internet area, and with 5G, it's just going to get even better. So right now, it's trading for 115.89. The buy point on this is just slightly above. This is about 116.23. So that's about where it is for the buy point. So you might want to mark this one down, Akamai Technologies. As you can see, we had a tremendous gap up today, and it's almost at its higher high. Now, here's how I like to buy stocks. I don't like to buy on dips. I like to buy when a stock is making a higher high. And this is the case with Akamai. So this is one that you might want to put on your list, AKAM, Akamai Technologies. It's got a relative strength of 98, so it is a powerful stock. And I think that is breaking out today, and I think it should maintain a very, very good upward motion. Now, I want to show you once again how I'm going to be trading Tesla, because that's a big question that a lot of people have that have Tesla stock. What to do with it? What should I do? How should I trade it? Well, here's how I'm going to trade it. Basically, up until today, you see, I believe the stock is moving up, and it is. It's at almost its all-time high. It's about 2,200 right now. Once that splits, and that split will happen on the 31st, that's Monday. Once that happens, the stocks will be distributed to everybody, and people will have a lot more stocks in their portfolio. Some people that had 100 will have now 500. So the people will rebalance their portfolios, as they always do, and they will sell off some of those stocks, 100, and usually, they might sell off half, they might, whatever. But that's going to cause a little bit of downward pressure. I expect that downward pressure to last not that long, because Tesla's a great stock, and it's going to be moving up on the other side of that very, very fast. But I do believe we're going to see a pullback on Tesla, and that's probably going to last until about Wednesday or Thursday of next week. It may only last one day, or it may last 2 weeks. I don't know. But there will be a pullback. I'm going to wait for the pullback, and then as it's pulling back, when it turns, I will be jumping into the stock, because I do believe Tesla is moving higher. And I think that offers a great opportunity to buy Tesla. Just for for full disclosure, I kind of show you what my holdings are currently. I'm only in 4 stocks. Can you believe that? I'm out of almost everything. I'm getting ready for this big Tesla pullback that I will be jumping into the stock again after the split, of course. And I'm in Apple, Facebook, Microsoft, and Skyworks. That's it. That's it. Everything's up today except for Facebook. It's a little bit of a pullback. I will be selling Facebook today, and I will also be selling Apple today, but I will be buying Apple after the split. Now, it sounds ridiculous. Why would I sell it today and buy it back tomorrow? Because I do expect this pullback, and I will be buying it back, hopefully better than it was before. So that's the plan, anyways, that I'm going to do. So let's look at some questions. Let's take some questions out there to see what's happening. Hey, thank you, Mr. Sid. Thank you for watching me from New Zealand. I'm amazed that anyone in New Zealand would be interested in something like this. Boy, I've never been to New Zealand. I've always wanted to go, and wow, that is a great thing. So you have a question with an 8% stop loss. Was I out of the game when you're out at 5? Well, not necessarily. But here's what I do with an 8% stop loss. And thank you for this question. This is a great question. When I first buy a stock, I will typically place a 7 or an 8% stop loss. Okay, why do I do that? Because I want to protect my position. I want to protect my position with that 7 or 8% stop loss. So if it pulls back, now as the stock moves higher, I typically will move my stop loss up. So sometimes if it's moving up nicely, I will set that right at the 50-day moving average minus about 2% off that 50-day. And I'll keep moving that up, and then eventually the stock will turn around and move lower. And when it does, that's when I am going to be sold out, but hopefully at a profit. So that's the idea. Now let me, so when you see in my small portfolio that I've sold something, many times it's because a stop loss has been breached. So I really appreciate that. I really appreciate that question. That's a great idea. Okay. NEO announces proposed offerings of $75 million of American Depository shares. Wow. You know what this says to me? It says that this thing is going to be very diluted. Dilution alert. I know that they want a copy, and maybe they will, because, NEO is sort of the Chinese Tesla. And when Tesla did this, it worked for them. I wouldn't be so sure it's going to work with NEO. If you're going out there and you're creating 75 million more shares to the people already out there, do you think those shares are going? Do you think the existing shares are going to be worth more? No, I think they're going to be worth less. That's usually what happens when you go out and you do that. Now, a stock split doesn't dilute earnings, but a follow-on offering, oh boy, it does. It really dilutes earnings. But let's look at the chart of NEO anyways, because I think that's an interesting thing that you're saying there. Well, here's the chart of NEO. I'm going to look at the daily chart here. Now, normally, to see the trend, you would look at the weekly chart, but I'm going to look at the daily chart. It looks like it is still moving up, which is amazing. It seems to be defying gravity. It's up $4.42 today, or at $18.55. So that's pretty impressive. But here's the thing: there is a pattern here. It's a cup with handle. The pivot on this is 1545. We're a little bit above the pivot. If you want to go back into NEO, and I may be going back into NEO because I did make some good money, but I was only in the stock for 3 days. I'm going to wait until it pulls back, probably to the 50-day moving average. That's this red line here. And by the way, for everybody that's looking on TikTok, I'm actually showing these charts, but you have to jump over to youtube.com/DallasTradingFloor, or I'm on Twitch at twitch.tv/DallasTradingFloor, and I'm also on Periscope at pscp.tv/DallasTradingFloor. So that's a great question, and thank you very, very much for that. I appreciate it. And hopefully I can give you another question. Okay, so what is the next question? What do you think about NCLH? NCLH. I don't know what NCLH is. Let's see what happens. NCLH. Let's see what I can come up with there. Norwegian Cruise Lines. Oh, man. Oh, I feel bad for you. Sorry about this, Em. Please sell this thing. This is not only a dog. This is a dog with fleas. I mean, Norwegian Cruise Lines is not going to come back for a while, if ever. If ever. I would be selling this thing. This has a relative strength rating of a 5. That means that 95% of the stock market is doing better than Norwegian Cruise Lines. So would I be in Norwegian Cruise Lines? No. If I had it, would I sell it? You better believe I would sell it. I'd sell it immediately, so fast. This thing is not going to yield any good results for you. I don't think this kind of thing is going to end well. I just hope you don't have a lot of your portfolio in it. Okay, so let's look at questions from TikTok. Thank you for holding on here. I appreciate it. What indicator? I just got. Okay. I'm sorry, I didn't say that one. Okay. Rocket. Rocket Mortgage. Okay, Rocket Mortgage is a new company. It's got a great name, Rocket Mortgage, RKT. I'm not particularly excited about this area because I think mortgages are great, but there's a lot of competition. I think it's RKT is the symbol on it. Yeah, Rocket Companies. Is that right? Provides digital solutions for mortgages. Yeah, this is Rocket Mortgage. Okay, let's look at it. Wow. Well, you know what? This is an IPO, but guess what? I won't buy this one, and I'll tell you why I won't. Because you don't want to buy an IPO until it's at least been out for 3 months. Now, trust me on this one. I know it's a little bit of a stretch, but typically what happens with an IPO is that the investment banks will sell it, and then it will move up, and then it will move down. So it's in the moving up phase, but I suspect that we're going to see a pullback on this one. Try not to buy. Watch list this, but don't buy it until it's been out there for about 3 months. So I just really can't recommend it. There's just not enough time on this. IPOs are very tough to buy correctly and make money out of the box. Usually you have to hold them, and I'm not a holder I'm a swing trader, so that's kind of where I'm at. So I'm not going to buy this thing until it's out there about 3 months, and then maybe if it looks good, I'll buy it, but not till then. Hi, Jim. What do you think about Bank America? Bank America, BAC. This is by the way, I believe that Warren Buffett had a Pew's position in this, but I think he dumped his shares because it's not looking good. Let me just show you the Bank of America chart. All right, well, here's why I won't buy Bank of America. All right, this black line here, this is the 200-day moving average, and it's pointed downward, so that's not good. And it's got a 50-day moving average that's below the 200-day. That's not good. And it's got an RS rating of 32. That's not good. Man, there's nothing good here. Don't buy it. This is a bad one. Don't buy Bank of America Corp. Really, it's not. It's not. This is not going to end well for you. This is not going to end well for you. So I wouldn't be in Bank of America. I thank you for the question, but most of the banks are really, really bad. Now, if you want to be in the financials, why not be in the fintechs? The best of the fintechs, I believe, is PayPal, PYPL. I want to show you the chart on PayPal just because I want to show you the contrast between the one we just saw, which was Bank of America, which is yesterday, and PayPal, which is tomorrow. So look at that thing, moving right up. That's the kind of stock you want to buy. You want to buy a chart like this. You do not want to buy a chart like this. Do you see how that's going down? See how this chart is going down? This is Bank of America. That's not a chart you want to buy. Instead, if you want to be in the financials, you want to buy a chart like this that's going up. And this is PayPal. This is a very good stock. Now, is it at a buy point yet? Well, it's going to be tough to buy this one because the last buy point on this one was 124.45 a cup. So it's pretty hard to buy this one. You could buy this on the pullback to the 50-day moving average, like here, but we're not there either. So this is a watch list. But that's what I would do instead of Bank of America Corp. So that gives you an idea. Okay. What about what do you think about Big C? Ah, Big C. I've heard good things about Big C actually. Let's look at it. Big C. Big C. Okay, this is cloud-based e-commerce. Okay, interesting. It's in Austin. Wow, look at this thing. It's skyrocketing to the moon. It's an IPO, but boy, you know what? I don't think I want to buy this one until it pulls back. This is just too new, but I would watch this. Okay, there's EPS due in 12 days. I don't know. Try not to buy them too close in front of earnings. It can be tough, but this is a watch list definitely. Big Commerce. Wow, what do you know? Big C, and this is in Austin. I always like things that are on Austin because I'm right here in Texas. We're here in Dallas. So that's pretty cool, but no, I don't think you want to buy it yet. You want to wait on this one. Okay, is it possible Apple will peak on Monday instead of with the new retail? It might. It very well might. I can't always tell if this is going to be the way it trades. It might peak on Monday, but I do think it's going to peak, and the reason I do think it's going to peak is because because this is the nature of when there's a big change in the ownership, and the split will cause a big change in the ownership. So I want to kind of show you kind of what I think. Currently, we're right here, and we're going to move through, and I do believe it might peak on Monday. There is a possibility that Apple it will peak on Monday. More than likely not, though. More than likely it will peak today. Probably in the next few minutes it will peak because we're getting close to the end of the day. I don't know exactly how it's trading. Let's look at it. I want to see how it is trading right now so that I can give you at least an educated guess on that. So let's look at the 15-minute chart of Tesla. And I just want to look at that really quick. This is the 15-minute chart. So here we go. This is currently how Tesla is trading. It does appear that it has peaked out. It looks like Tesla is going to peak at about 2,300. It's pulling back. It's about $15 down from its peak right now. I do think this is we're almost at the close. I think we're at 4 p.m. What time are we at? Well, I don't know exactly. We're just about at the close. So I do. It's starting to pull back. It looks like, yeah, it's starting to pull back. Okay, this is the 15-minute chart. I do think that we're going to be pulling back now on Tesla. So, and let's look at Apple just to see if that's the same kind of chart pattern with Apple. So yeah, okay, no, Apple's pulling back now too. Yeah, it's pulling back. Yeah, it's starting to pull. It's starting to pull back. Apple had its peak basically at on the 21st, which makes total sense because the 21st was the day of record at the very end of the day, and it's been kind of trending lower. So I do think we've seen both the peak in Apple and in Tesla. We're going to wait for the split, which is going to happen on Monday, and I think we're going to trade down a little bit from there. We'll see. I'm going to wait, and then once it turns, it's going to pull down, and then it's going to when it starts turning up, I'm going to be buying probably pretty hard because I do think those are great issues, and I think they're going to go up. But I do think that it probably is going to peak today. Now, that doesn't mean that, if you sell on Monday, you're going to lose any money. You're not. But I do think it'll pull back a little bit. That's just my opinion. I can't wait to buy cheap call options next week. Yeah, you're right, man. You're right. There's going to be some good call options out there for both Apple and for Tesla. The Tesla options have just gotten so crazy that I just don't want to pay the premium on them. It's just too much. Now I've been selling Tesla calls, but it with covered, by the way, not naked. But wow, it's out of whack. I think it'll come closer into reality, and I think I agree. Absolutely, calls on Tesla are going to be very good. It's a good time because when there's a pullback, there'll be a little bit of softness in those calls, and then I don't normally recommend naked calls very often, but on the pullback, I think a naked call on Tesla with about a 3 to 4 month horizon is a good bet. I really do. So thanks on that. Will you be getting into Walmart? I don't know about Walmart yet. It's funny. I like Walmart a lot, of course. I mean, what's not to like about Walmart? It's the biggest retailer in the world, and they're the ones that are left standing. But I just don't know if they're going to be able to be successful getting TikTok. If they are, I think it's just stellar. I think it's going to be amazing. I'm going to watch list this one. I'm not going to. I may be getting into it. Watch for it on my watch list. And by the way, it's super easy to get my watch list. All you have to do is go to go to the website www.dallastradingfloor, and then in the lower right hand corner there's a little place where you can put your first and last name and your email address, sign up for free, and I will give you the link so that you can see the portfolio. And as a matter of fact, talking about the portfolio, I want to pull that up so that you can see it. And this is the portfolio. And I'll just kind of show you what I do with this portfolio. Uh-oh, am I getting that? Let's see if I can get it. Well, let's pull it up. And you'll be getting the link to this by just going to www.dallastradingfloor, putting in your info, and then I'll get it right to you. So you'll have access to this, and you'll have look, so you can take a look and see what I'm doing here. This is the now you're going to see it in just a, there we go. There it's coming up. There's a little bit of challenge there. Okay, currently on my smart portfolio, I'm mostly in cash, but I do have positions in 3 stocks right now: Microsoft, Facebook, and Skyworks. I'm getting ready to buy Tesla. I'm getting ready to buy Apple, but I'm not there yet. I'm waiting for it to come through this. So this is where I'm at right now. Now, what I do here is I have let's see if I can pull it down. There we go. I have a watch list that I put up here. Now, I just put one on watch list called Akamai. I just put that on today. That's got a buy point of 116.39. Now, it's right below that, so it's not in the buy zone. But what I'm going to do on Walmart is I'm going to put it on here, and I'm going to show it when it comes into the buy zone so that you'll have that, and you'll be able to see as I'm trading. And, of course, this is all free, by the way. All you have to do is go to the website, and the website is www.dallastradingfloor.com. And for everybody that's looking on TikTok, I'm showing all these charts on YouTube. It's just youtube.com/Dallas Trading Floor. All right, so let's see. What is the link? What is the ticker? Okay. What do you think about Rocket? Big C and Rocket. I think they're interesting. Big C is really interesting. It's a little bit too early on Big C because it is an IPO and it's just come out of the box. Now, Rocket Mortgage is a more established company, but I still wouldn't buy it until about 3 months. So these are watch lists, and I will put them on my watch list as well. These are watch list stocks. Really, can't be bought for about 3 months. But thank you very much, because those are both IPOs, and you can make money on IPOs, but I typically like to have them seasoned for about 3 months. Okay, so 5G. Okay, this is an interesting one. This 5G is this is a very good way to play the 5G. And starting next week, we're going to do some 5G shows here. But FIVG, and this is an ETF. Yeah, there it is. This is an ETF, and this is a really good way to play the 5G because it includes Qorvo, it includes Skyworks, it includes, all those kind of companies, but it's an easier way to play it. The last buy point on this one was 27.43, and it was basically, a few weeks ago. At 29, we're in a tight formation. This is probably going to move up in the near future. So I'm looking at this. If there's a pullback to the 50-day moving average, I might be in this one. The only thing that concerns me is this relative strength of 78. Now, this is not a stock. This is an ETF, but it's a great way to play the 5G. For the next month, folks, 5G is going to be hot because we're coming in to a very important announcement, and this is going to be, I think it's interesting. Both Tesla and Apple are sort of driving the market here because Tesla is going to have Battery Day, which I think is going to be huge. That's one of the reasons I'm waiting for the pullback after the split to buy, because I do think we're going to move super duper into the Battery Day. Also, we are getting to a point where we may, with the 5G thing, the 5G rollout from Apple is going to happen about September 21st or 22nd, and because every year they do that, and the networks are ready to go, and so this 5G fund, it's a good way to play it. So that's something that. Thank you for bringing that up. I think it's a very, very, very good suggestion, and I totally approve of it. What's XRP, and why are you talking about XRP? I don't know if I'm talking about XRP, but let's look at XRP here. XRP. XRP is going to be a spider, so let's see if I can bring it up for you. The XRP here. XRP. Well, are we seeing that? Is that right? XRP. Well, is that XRP or XRT? No, XRP. Oh, I guess I don't know why. I don't know this. Okay. Why would people? Okay. What do you think about IMAX? Oh, IMAX. I think if this is IMAX, the old IMAX, the big screen, this may be the only surviving in-store. Yeah, this is terrible. Would I buy IMAX? Not on your life. Not on your life. You could buy it if you wanted, but I'm not going to buy this bad boy. It did move up above the 200-day. I still don't like this chart. Relative strength 45. Wait, this has got, this is for movie theaters. Folks, wake up. Nobody's going to movie theaters because of COVID-19. You don't want to be in this. You want to be in Netflix. That's where you want to be. The movie industry in general is in trouble because they can't release films. The only films that they can release are on Netflix, and Netflix controls it. So don't buy IMAX. Bad. It's better to buy one share of Netflix than it is 150 shares of IMAX. So let's look at Netflix. NFLX. Netflix is the future. Let's look at Netflix. Here we go. Look at Netflix. Wow, we're coming out to a buy point. We have a buy point on Netflix coming up. This is incredible. Look at it. It's up $31 today. Come on. Why are you wanting to buy IMAX? It's not the thing. It was great, man. When I was in high school and disco was king, IMAX was awesome, but that was a long time ago. So you don't want to be in that. You want to be in Netflix. Netflix is the future. The buy point on Netflix is 575. So we're right below that. So if this thing moves up to 575, I'd be buying Netflix. So this is setting up very nicely. Netflix is setting up very nicely. There's a lot of accumulation going on. So even at a high price like 525, Netflix is king. IMAX, not so much. So let's look at some other questions from there. Okay, cheap call options. I'm always I always like Tesla, but I don't know if you want to get. We'll be getting into Walmart. I might on Walmart. Oh, okay, very good. Hey man, mega how to man, great move. I think January timeframe, February timeframe. This is a good way to go. You just want to make sure you're not paying a little bit too much premium on this one because, you know, again, for everybody out there with calls, the naked calls, the further you go out, the more you're going to pay on that time premium. So try to keep that keep that a little bit down. So I think January might be you get a pretty good call on that. So we'll see how those trade. But I think that's an excellent idea. I think that I think there's going to be a pullback on those calls, and I think they're going to be a good buy. So very, very good. I'm going to show this for everybody out there. Just want to show this comment because I think I totally agree with with Mega How To Man, right? Because I do think this is going to be a good play. So thank you for that. Let's see. What about Apple? Well, Apple is going to trade the same. I'm getting my portfolio ready to buy a lot of Apple because I do think it's going to go much higher after the split. I really do. I think it is. And that's going to be the 31st of August or Monday. It's going to split 4-for-1. So I'm getting ready to buy probably with both hands. Now, I probably will not be buying it until maybe Wednesday or Thursday or maybe Friday. I don't know. It just depends what's going to happen. I'm going to be watching Apple very closely. I'm going to watch it move. I believe it's going to move down on a split adjusted basis. And then when it hits about Wednesday or so, I think it's going to start moving north. And that's when I'm going to be in it. So, okay. Should we buy NEO? Well, let's look at the NEO chart once again. I've made money on NEO, so I can't be totally down on it. But here's the problem with NEO. It's very volatile and it's very cheap. So really not the thing. At this price, I wouldn't buy it. I'd wait for a pullback to about 16 on this. I do think it is buyable, by the way, but wait on NEO. It's not the time to buy it. I've sold mine. I think we need to be back at about the $16 range. Will it pull back? Who knows? But I do think it will because I'm looking at this 50-day line, and it looks to me like next week we should see it maybe back in the 16.50 range. So if it pulls back to about 16, I think you want to buy it, but I think you want to sell it at this price. I just think it's too high. It's moving up too far. So I do think it's going to move back down. But it could go higher as well. So I may be back into NEO next week. I've made money on it, and it's just one of those things. But I wouldn't be a buyer right now, not on a Friday. Wait for it to pull back. I think you're going to be pleased because I do believe it is going to pull. It is going to pull back as well. Sold Apple 2 days ago. Yes, sir. You're a good trader, man. I just want to say, I sold all my Apples. I only have 100 left, and that's already sold today. I have a call option that is going to expire today, and I'm going to be out of it today. But I'm going to be back in to Apple, but I'm going to wait for it to pull back, and I think it will. So that's kind of cool. Hey, what do you think about GE for the long-term hold? Well, I have an interesting admission. As an undergraduate, I went to a school in Maryland on the Eastern Shore called Washington College. And interestingly enough, there was another guy in my class. Well, he was behind me a little bit, but he was much smarter than me. And his name is Larry Culp, and he is now the CEO of GE. But unfortunately, GE isn't what it used to be. Unfortunately, I wish it was. I don't really like this chart. I want to watch this one, but I can't bear to watch this. This is like watching a slow motion train wreck. It's just going down. You just don't want to buy a chart like this. Wait until it turns up. Wait until it moves above. And, I just can't be excited about this one until it's over $30 a share. And we're at 6. So, no, I'm sorry. I couldn't buy it. Now there is one kind of wounded warrior that I do like, and that's Ford. And I want to show you that one because I do think that they have a possibility. I still don't think that they're still losing money, which is terrible. But Ford is less bad. So let me show you of the kind of the wounded warriors. I want to show you a less bad wounded warrior, and that is Ford. And right now it's in a buy zone, by the way. It's in a little buy zone. So it's at $6.95. So I do think that Ford is buyable. I do think it is. I really do. Now, is it a great stock? Are you going to make a lot of money on it? Probably not, unless not for a while. But if you want to get these wounded warriors, if you're interested in these kind of stocks, then instead of buying GE, buy Ford. I think it's a better bet for you. I really do. So let's take a look at TikTok. Oh, the YouTube link. Okay, super duper easy to get to YouTube for everybody there on TikTok. All you have to do is go to youtube.com/Dallas Trading Floor. So that's all you have to do to get to my YouTube feed. And I'm showing all the charts on that. And if you do go over there, please like me. Please subscribe. Appreciate it very, very much. It helps me. It helps me more than you know. So thank you very much in advance. Can you tell me about Tetchy? I have never heard of this company. TCEHY? That's interesting because usually they don't have that many characters. TCHEY, I think. Is that right? Let's see if I got it right. TCEHY. So let me see if I can. Let me see if it comes up on my machine. TCEHY. Okay. No, I'm afraid I don't have a symbol for that one. That may be a pink slip stock. It's five letters. Typically, I can only do 4, so that's where it is. IBN. All right, so IBN. IBN. Yep. Okay. Ooh, EC Bank. Okay. Private sector commercial bank. Oh, this is interesting. In India. Interesting. Okay. Let's look at the chart. I'm not familiar with this, but this is interesting. One of the great things about Indian stock, by the way, everybody, especially in the financial sectors, I don't really like the financial sector too much in the U.S. right now because of the record low rates. But the great thing about India is that the rates that they get in India are much higher are much higher than in the U.S. So that can be a very good thing. And India is on fire. There's a tremendous need for commercial lending in the mid space. So there's not a lot of sources. So banks in India are doing great, and I think this is a good place to look at if you're looking to be in the Indian market because the financials in India, the banks in India, have a great potential because there's so much growth in the Indian market. So I do relatively like this chart, by the way. Now, I don't like the fact that the 50-day is below the 200-day. I don't like that. But I do love the fact that we're seeing strong buying in this. It does have a relative strength of 45, which is really way too low for me, but it is a financial. I like to see 80 on there. But you know what? They've had some excellent earnings. Look at that. The earnings per share is up 16%. So this is a watch list. This is not a buy yet. But I like this. I like this bank. I like this chart. I think this is a good one. Now it trades as an ADR. For everybody that doesn't know what an ADR is, then when a company is outside of the United States, and on another exchange, like for instance this one, they have these things called American Depository Receipts, which trade in the New York Exchange, so that you don't even have to exchange the currency. You can just buy it and sell it right in the New York Exchange, and that's a great way to go. So this is a great way to buy a bank like this. But I do like the chart. I wouldn't buy it right now, but it is looking very nice. This is a good chart. This is a watch list. I would be looking to be in this one. I wouldn't be in this one until it was at 1535. But if this thing moves up to about 1535, I would buy this thing. I would absolutely buy it. So thank you for that question. That's an excellent question, by the way, and I thank you very much for it. And so let's see, next question, if we can take that. Okay, so which charting issue? Okay, thank you very much. Appreciate that. I'm actually using professional software. It's called MarketSmith, and it does have pattern recognition, as well as it has AI pattern recognition, and it lets me scan thousands and thousands of of stock. I wouldn't have enough time to scan all these things. Before, I used to do this by hand. I would print my little charts out, and I would use my protractor, and that works good, but I could only look at maybe, at the maximum, maybe 100 charts a day. With this, I can look at literally thousands of them, and then I can actually physically look at it maybe, and then narrow them down to the ones I'm looking at. So I really like this. It's called, and I'm not getting a commission. I wish I was. I wish I was. Such good software, but it's called MarketSmith, and it's available from Investor Business Daily. So if you're interested in that, it is kind of pricey, but if you're going to do this kind of for a living, which I'm sort of ending up doing, it does sort of pay possibly to think about getting something like this. There's other good software out there too, by the way. So, but this one I particularly like this one as well. So that's the tool I'm using. So I really appreciate that comment so much. All right. When someone says full position, half or quarter, what does that mean? Thank you for this question. I'm going to show you exactly what that means. All right. So I'm going to go back over here to my little sample portfolio, which, by the way, you can get a link to. It's super easy. All you have to do is go to DallasTradingFloor.com / and then in the lower right-hand corner, just give me your name, first and last name, and email address, and I'll send you a link out, and you can definitely take a look at that. What a full position means is this. If you have a portfolio and it's, say, worth $10,000, in this case, my portfolio currently, as of right now, as of this minute, is worth $7,069.84. This is my small portfolio that I show for demonstration. I started out with about $5,000. That was about 2 months ago. And now we're at about $7,069. So we've done okay. But what I do is I look at this and I divide this number, $7,069, I divide that by 8. That gives me 8 full positions. So that's what a full position means. It means take the value of the portfolio, divide it by 8, and that gives you 8 full positions. Now, do I always want to put on a full position when I'm coming into a stock? No. I want to usually come in with a half position and then maybe a full position, or maybe a quarter, a half, a full. But I want to ease into the stock. I don't want to go in, unless I know something really extraordinary, I want to ease into the stock. So that's what I do here in my watch list. And I will show you that just in a second. So here we are with the small portfolio. And as you can see up here, these are approximately one full position. Now, the biggest position I have currently is cash, because I'm looking where to park this. So these are full positions. Now, how do I know how to size them? Well, I have this thing called a watch list down here, and it's very simple. And what it does is I take the number of the full position number, which in my case on this portfolio is $883.73, and I divide it by 8, and that gives. I'm sorry. I misspoke. I take the full value of the position, $7,069.84, and I divide it by 8. And that gives me this number. This is what a full position is, $883.73. And then I enter the number of shares to equal just right below 100%. So if I were to buy 7 shares of Akamai Technology, which I just put on the list, I would have approximately a full position, or 91%. Now, if I wanted to do a half position, I would adjust that down to about 3 shares, which would give me about a half a position. That's what a full position means. That's what they're talking about. This is called position trading, and it's definitely a way you should do it, because that way you don't overexpose yourself to risk. So thank you very much for that question. Very, very good question. Hey Jim, I'm in shop and had it pull back today. What do you think I should sell? Well, always sell when it gets to 7% down. It's just the way you do it. I mean, It's just the way you do it. So let's look at the Shopify chart. Yeah, I'm afraid there was. Let's look at that. Let's look at that 15-minute chart. So let's look to see how it's trading. Now, typically, um, stocks trade lower on a Friday, and this is definitely proven this. We did have a pullback, and we were pulling back, and it looks as if, yes, there was a lot of selling, but uh, it's a tough day to buy on Friday because that's when options expire. So I would, if you're down more than a few percent on this one, it may move back up. I don't think the trend is necessarily broken. Let's look at the weekly chart. But I think that if you're going to be down any more than 7%, you should sell it. But I do think that we may see, if there's a pullback, I think it's going to bounce off of this 50-day moving average. So let's look at the daily chart to see if I'm right. Okay, yes, it's bounced off of that. What's going to happen is it's going to pull back down to below $1,000. It's going to pull back to about $980. Looks like maybe is that maybe it may go that low, may not, and then it's going to bounce back up. But it's not really a buy until it bounces off that 50-day moving average, and I'm showing that right now. So currently, that 50-day is a 992. So what I would do here is I don't think for some reason it didn't quite enter that right. You might want to sell it and then wait till it pulls back to about 992, and then if it moves to 992 and then starts reversing off of that line, that's probably a good place to buy it, because I do think it's going to go higher. I don't think Shopify is going to go, is a bad stock at all. I think it's a wonderful stock. I think that's just how stocks trade. They kind of go bouncing up this 50-day moving average. So that's kind of a cool thing that you can do to do that. So wow. Hey, thank you, man. Thank you very much. I'm getting better. We may have some more video making capability. Much better technologically than I am, by the way. I'm getting better technologically, but I've come a long way from the bed sheet, but I'm getting better. So hopefully I'm going to have some great stuff for you guys. I just had a group that came in from New York, and we were talking, and they were talking. I was talking about the CanSlim method and how I trade, and how the William O'Neill method. And so I'm going to hopefully make more stuff on that. It's not the only way to trade. This is not the only way to trade by any stretch of the imagination. But I will tell you one thing. Most of the top traders in the world are CanSlim traders. Mike McIlvaney, who's excellent. David Ryan, Gil Morales. I mean, I can go on. These are sort of my gurus, the people that I kind of think are great as stock traders. So, but there's a lot of different ways to trade. Buzz Shorts trades differently. He's an older man now than this, but there's a lot of great ways to do it. But this is the way I like to do it. Do you trade stocks or options? I actually trade both. As a matter of fact, I make a lot of my monthly income by buying shares in stocks that I think are going to go up, and then selling the call options against them, and then waiting for those options to expire. Typically, and if I get called out, that's no problem either, because I make a profit on that too. So I do a lot of option stuff, but I don't like naked options that much. I only buy a naked option in the case of, well, now Tesla's a different situation. I do think they're going to go up. I do think that's good. But most of the time I do not buy naked options. I'm a seller of options, and I sell primarily covered calls, but I also do spreads, and I love spreads, especially around earnings. So I will hopefully be sharing some more of that with you. So thank you very, very much for that question. What is the best paid and unpaid short stocks in your opinion? Wow, good question. I really like TradingView. I think, for unpaid, I think it's good. It has pivot points, which it's a little bit hard to work through it, but I think it's really, really good. Now, I typically use a paid service because, first of all, I can write it off, but second of all, it helps me a lot in my watch list. I'm going to try to share as much of that as I can with people on my small stock portfolio by putting it out there. And of course, if you're interested in getting the link to it, it's really easy. All you have to do is go to DallasTradingFloor.com, and in the lower right-hand corner, just put your information in there, and we will get you a link out so that you can see that. And also, subscribe to my Action Trade Alerts. And if you're watching me on TikTok, super easy to get to the Action Trade Alerts. All you have to do is go to my profile, hit the link, and you'll be taken right to the sign-up page. And of course, it's all free, so that's a good way to go. Microsoft. I actually have a position in Microsoft right now. So let's look at how Microsoft is trading. This is one of my favorite stocks. I will be absolutely honest with you. This has been the gift, as in my opinion, this has been a gift that's given me a lot. I have made a lot of money trading Microsoft. Now I'm not trying to showboat here, but this is, if you're going to trade, if there's a stock that you want to trade, this is a good one to trade. I can tell you make money on this one. Other ones might be more up and down, and you might make more, but Microsoft is just the gift that keeps on giving. Now, look, it's moved up nicely off the 50-day moving average, and it's moving up. It's 228, and wow, there is a buy action here. You see this? This is volume. I'm trying to show you with my little pointer here, but I think that we may see Microsoft go into a consolidation, and then I think Microsoft is probably going to head higher. And of course, I have it in my portfolio. This is my small portfolio, and I've had it for a while. And we had some very nice buy signals on it. And as you can see, it's just done great. And it's Microsoft. It's amazing. It's up 9% in 12 days. That's amazing, because it's not even that hard to find a stock like this. I mean, everybody's heard of Microsoft, and yet it still is a good stock. So I can't say anything really bad about Microsoft. I love the stock, and I've always loved the stock, and at least for right now, it's one of my favorite stocks. So I don't think you can go wrong with them. I don't think you can go wrong with Microsoft. Okay, so what about J.P. Morgan? Ugh, I wish I liked J.P. Morgan more than I do. I believe that that J.P. Morgan, it's the best, and it's the best of the J.P. Morgan and Chase is the best of the big money center banks, but I just still don't like the chart. Even though it's moving up, it's still below the 200-day moving average. It's got a relative strength of 29. I just don't like it. The one, if you've got to be in the banks, and I don't recommend being in the banks, the one you want to be in is Morgan Stanley. That's your better chart. Let me show you the chart on Morgan Stanley. Morgan Stanley is a better chart than J.P. Morgan, and why? Because they're making money with their trading income. Now, Morgan Stanley has a buy point, and the buy point is 53.42. So let me see if I can show you that. Yeah, I'm sorry, 53.51, not 42. So I was off by 9 cents. So that's not too bad. It does have a buy point. It is moving up. It is going to move higher. This is one of the few financial stocks that I actually like. It's got a relative strength of 77, and this is primarily due to its trading income. If you're going to have to be in the financials, and I really don't want to be in the financials, but if you're going to have to be there, you want to be in Morgan Stanley or MS. That's where you want to be. You don't want to be in J.P. Morgan, even though it's a great bank. It's still it's not as good as Morgan Stanley. Just no question. Is Amazon on a second stage base? Let's look at that. That's a great question, by the way, because here's the thing. Even though Amazon is way expensive, it's like over $3,000 a share, I'm going to hopefully next week show some ways to trade this using options that's a lot less expensive. I'm going to show you how to do some spreads on this that hopefully are going to be less expensive than buying the shares, because buy 100 shares of this, you got to be rich at 34.01. I mean, you have to have 300 to buy 100 shares of this. Yeah, you're going to have a ton of money. You're going to have a ton of money. But guess what? We're actually in a consolidation. Thank you for that question. Very, very astute. That is a very good astute. We're not in a second stage, but yes, we are in a second stage base, but it's the weakest of all of the stages. It's a consolidation, but it's definitely in there. And the buy point on Amazon right now, the buy point on Amazon is 33.44.29. So 33.44.29. Let me put that out there just so you know. AMZN pivot is equal to 33.44.29. So I'm going to put that out there hopefully for everyone so they can see that pivot point. But yes, we are. We absolutely are. It's the weakest of the chart patterns, though. It's the consolidation base, which I don't like as much as the cup with handle, or the double bottom, but it's still a base. So there you go. Jim, if someone were to put 10 grand aside, what would you recommend? Um, Here's what I'd recommend. Use if you're gonna do a 10 grand portfolio, best way to do it is to take your 10 grand and divide it up into 8 segments, and then take and find the best stocks that you can that are breaking out in that. That's essentially what I try to do with my small portfolio. Now it's not 10 grand, it's a little bit less than that. It's only 7 grand, but I've had excellent performance on that. And you can see exactly how I trade that. Super duper easy. All you have to do to see this on a regular basis is go to DallasTradingFloor.com and sign up for the free action trade alerts and ask about the small portfolio. And it's super easy. All you do is you go to DallasTradingFloor.com, and then in the lower right-hand corner, there's a little segment where you can sign up, first and last name, and email, and I'll get you the link right out so you can see exactly what I'm doing every day on my small portfolio. So this is how to trade $10,000 or less. So I hopefully can help you in your endeavor with that. So that would be, hopefully we can make you some money in that, because I definitely think we can definitely make money doing that. So that's a great way to do. Okay, can you explain what a naked call is? Well, a naked call, let's say for instance, I like to sell calls because 70% of the time, if I'm a seller of a call, I will keep the money, and I won't give you the stock. So if I sell a call, let's say I sell you a $100 call, and at the end of the expiration, at a $100 strike price, and at the expiration date, the stock is $120. Well, you're going to exercise that call on me, right? You definitely are, because it's worth, you can buy the shares from me for $100, and then they're worth $120. So you're going to definitely do that, right? Because you own that call. Well, here's the thing. I've got to deliver those shares. Well, what if I didn't have those shares to begin with? What if I didn't have the 100 shares and I just sold a call and saying, well, if it goes above that, you can buy from me for $100. Well, I got to go out in the market. I got to buy those at $120, but you can buy them for me for $20. For $100. So therefore, I'm going to lose $20 a share. So that's what a naked call is. You don't really want to have naked calls. And I can show you, and I will show you different ways that you can cover those. The easiest way, of course, is to go in and buy the stock like the underlying stock, and then sell the call on that. And by the way, all call contracts represent 100 shares. So that is a naked call, is where I don't have the underlying stock or an underlying option to offset it. So that's what a naked call is. When you buy Apple and Tesla, will you buy once or slowly? What kind of timeline? Good question. Here's the thing. I never jump in with both feet, because sometimes I'm jumping into there's concrete below me, and I'm going to get killed if I do that. So what I do is I jump in. I do it slightly. I jump in once and then twice and three. So I do it. I go in with a half position, a full position, 2 positions typically, if I'm moving into the stock. So will I go in and buy all the Apple at once? No. I'll go in and I'll buy the Apple, and then if it goes up, then I'll buy a little bit more, and then if it goes up, I'll buy a little bit more. Typically, the way I come into a stock is I'll come in with a half position, then 1 full position, and then possibly 2 positions if it's really good. And that's how I'll do it. So that's a very good question. Thank you for that. GLXY, Galaxy Holdings, Digital Holdings. That sounds intergalactic. So Galaxy, GLXY. Let's see. Oh, it doesn't show. Huh. Is that right? GLXY, Galaxy Digital Holdings? Okay. I don't see that one. I'm sorry. I don't see that one. How do you do that in Excel? Oh, well, here's the thing. Thank you. Actually, the small portfolio that I'm showing you, it's actually called Google Sheets. And why do I have it in Google Sheets? Well, the reason I have it in Google Sheets is if I save it in my Google Drive, then it will go out every 20 minutes and update the stock prices. So that way I don't have to have it constantly, go in and refresh with Excel. You can do that with Excel, but it's just easier to build it into Google Sheets. And by the way, it's free, so that's why I do it in Google Sheets. It's not Excel, but I usually I prototype the sheets on Excel, and then I transfer them over to Google Sheets because I'm really an Excel guy myself, so I can see where you're going. Dollarama, DOL, cool. I actually like Dollar General better than Dollarama, but let's look at Dollarama, DOL. Yeah. Okay, this is Exchange. No, is that? No, it's Dollarama. No, this is a different one. I thought this was Dollarama. Okay, if you're looking for a dollar store, the best of the best dollar stores is DG, Dollar General. So I'm going to show you DG right now. And by the way, DG is actually in a buy zone, so I want to show you that. DG is currently selling at $200.39 per share, down a little bit today, but it's definitely kind of sticking around in this buy zone. The buy zone is from about 193 up to about 220. So that's the buy zone. So it's definitely in a buy zone still. And this is a good stock. Dollar General is a good stock. If you're going to buy a dollar store, why not buy the best one? Buy fewer shares of the better one. This is the one you want. Dollar General. This is the one you want. So that's my take on dollar stores. All right. So let's see. What price would you be looking at? So this pullback. I don't know. That's a good question on the Tesla pullback. I don't know where it's going to pull back to. I do think it's going to pull back, though. I think it's going to pull back at least 10%, and it may pull back 20%. Who knows? But I'm definitely going to wait for it to pull back. Now, what I'm going to do is I'm going to wait as it pulls back. I'm not going to buy it, and then when it changes direction, that's going to be when I'm going to be buying it. Well, everybody, I've been on for an hour, and I thank you so very much for all the questions. And I will be back on Monday after it splits, so this is going to be pretty exciting. I didn't get to everybody today. I'm sorry. I'm getting so many questions. It's getting really popular, and thank you for telling your friends. I really appreciate it. I'm getting a lot of love for you out there. And if you are watching on YouTube, please like me and please subscribe. I appreciate that very, very, very much. If you want to get on the Action Trade Alerts, and this is totally free, just go to DallasTradingFloor.com and sign up, and it's totally free. And if you're on TikTok, super duper easy. All you do is just go to my profile, hit the button, hit the link, and you will be taken directly to the sign-up page for the trade alerts. So thank you very, very much. So let's see, I have one last question. Oh, Teladoc. Let's take one question on Teladoc before we go. This is the last one, I'm afraid, for today. Teladoc, let's look at it. Okay, it's pulled back into a buy zone, but it's under the 50-day. I don't like that. I want to see it move above, but by the way, I was in Teladoc. I sold. Where did I sell Teladoc? I can't remember exactly where I sold it. I did sell it, I believe, in this pullback. I believe it in this pullback is where I sold it. But right now it's below. This might be a very good buy because now if this thing starts to move up on Monday, Teladoc may be a buy if it goes above the 50-day moving average. So where is it now? Well, if this thing is going to break on Monday above about 215, it might be a buy. Teladoc might be a buy because it looks like it's going to bounce off of the 50-day. So that's my take on Teladoc. And I thank you so very much for watching today. And I will be back on Monday at 2 o'clock. At 2 o'clock, and I will see you then.